by way of introduction. I have been in the appraisal and valuation business for 40 years, and in about 32 of those years, I've been dealing one way or another with fair value. In the late 1970s, some of you may have read in your history books, because I don't think most of you are old enough to remember it, but the SEC and the FASB were dealing with price level accounting and replacement cost accounting in the late 1970s. Those experiments, and they were experiments, died of their own weight because they did not provide useful information. 30-some years later, the FASB has come out with Standard 157, and as I will say, and it's somewhat controversial, I will say that they have not yet solved the problem of useful information. In my judgment, FAS 157 has some severe limitations. Okay, who here is against fair value? Because the opposite of fair value is unfair value. How many people here? No.
No, wait a minute. Did we say is it fair, just, or accurate?
Well, I'm going to take the term as it is now, and we'll go into what fair value does or does not mean. But no, I heard nobody stand up and maintain, even the most ardent appraisers who were against, and we're almost all against the FAS 157 definition, but not a single appraiser has argued in favor of unfair value. So it's we're all on the same wavelength in terms of the terms we'd like to use. We just don't agree how to define those terms. In theory, current values or fair values are better than historical cost. I know nobody who is arguing that for many kinds of decisions that historical cost is better than fair value. The problem is that in many instances fair value may be irrelevant, but it is not necessarily worse. Current values represent actual or potential cash flows to market participants. This is one of the arguments that's used and has some validity. Business decisions are made using current values. I agree with that also. In practice, however, and here's the problem, the same asset can have different values to different market participants at the same time. Implicit in the FASB definition and writing in 157 is an assumption that there is one value and that that value can be developed and displayed. And the problem is that different values can be assigned to the same asset at the same time. And when I'm hired by companies, and I have valued over $100 billion of assets in my professional career, the first question that I ask is, what is the purpose of the value? What are you going to do with the information that I provide? Nobody has ever come up to me and said, Al, I wish you'd just determine the value of my business. Nothing's going to happen. I'm just intellectually curious. Intellectual curiosity has not put a lot of bread on my plate. Business decisions and potential business decisions have driven the appraisal business for about 115 years. And for 114 or 113 of those years, we used the concept of fair market value. The question that I ask is, does the provision of fair value information as defined by the FASB on assets that cannot or will not be sold provide useful information to help investors and creditors project cash flows? Helping investors and creditors project cash flows is the objective of financial statements according to the FASB, and I would argue that the provision of information on fair values that are for assets that are not going to be sold does not help understand cash flows. How do you use the fair value of an asset that will not be sold? Let me give you a couple of examples. Exxon service stations, Coca-Cola's trade name, Microsoft, Windows software. I could, if the Coca-Cola company hired me, I could determine a value for their trade name. Other people have done this, and you hear estimates of approximately $50 billion for the value of their trade name. If I told you that the value was $51.5 billion, how would you use that in deciding whether to drink Coca-Cola or buy Coca-Cola stock? The value of the trade name is very similar to the value of the company, because essentially the Coca-Cola company is a giant operation to convert sugar into cold drinks that are available almost every place that you want to buy one, and it's the trade name that really is the secret of their success. So valuing the trade name is essentially the same as valuing the business. Microsoft's Windows software. How much is the Windows software worth to Microsoft? I can determine the value based on the cash flows, but is Microsoft likely to sell the Windows software to somebody as a business? I mean, obviously they'll sell you an individual package for $200, but the product itself, the intellectual property inherent in the Microsoft Windows software, is not for sale and is not going to be sold. Finally, Exxon, let's say they have 10,000 service stations. I could value each of those 10,000 service stations, and I had valued for much smaller oil companies 2,000 and 3,000 service stations. But how that information could be used when those service stations are not going to be used, as an investor in Exxon, am I really interested in the value, the real estate value of those service stations, or am I more interested in how much new oil they're finding and what the economics are of oil shale and other substitute products? So coming up with the values of these assets is relatively straightforward. I've done it. The use of that, however, can only be justified when there's a specific commercial transaction planned or potentially available. Fair value versus fair market value. Most people, when they hear the terms fair value or fair market value, say, what's the difference? The day that the FASB first started to develop a standard, their definition was almost identical to the fair value definition that I've used and other appraisers have used for over 100 years. Gradually, as they wrote the standard, they salami sliced away the definition until they have now come up with their own brand new definition that bears relatively little relationship to fair market value as I have known it and used it, and all of my colleagues in the appraisal profession have used it.
What are the differences?
I'll go into that. The fair market value worked, the IRS used it, the courts used it, but the FASB wanted to start with a clean slate. They didn't want the baggage that came with the tax court and the other court decisions and the 115 years of usage that had grown up. So they wanted to start with a clean slate. Unfortunately, the definition of fair value as they came up with it is not the way that business people, and I use the term business people, think. I have an accounting background. I'll be glad to talk about accounting, but here I'm talking from a valuation perspective.